Hi everyone, today let's talk about shipping through the Red Sea, then we'll talk sentiment, the data, then we'll look at the charts as well as my results for the day and thoughts going into tomorrow's session. If you like trading stocks and options and making money, definitely like and subscribe. I make videos like this every single day that the markets are open as well as Sundays, so make sure you hit the bell so you don't miss out on any future episodes. Welcome to the Portfolio Bulletin. Let's get started. So the Houthi rebels are impacting the transportation routes through the Red Sea, which is potentially diverting around $35 billion worth of cargo as a result of the Israel-Hamas war. They're saying they are going to continue doing this as long as Israel continues to prevent shipments going into the Gaza region. And they mention here, so far $30 billion have been diverted. There have already been 15 strikes on different vessels moving through the region. And interestingly, the US has not really reacted very strongly to this. Apparently we're sending forces, but we don't want to strike necessarily to escalate the war with Iran. The Houthi rebels are backed by Iran, and if we do take actions against them, Iran might be provoked to take stronger actions against us. But the question is, how long can we allow things like this to take place and impact the global markets? I think there's probably a pretty good argument for taking out these Houthi rebels. I doubt that they have the military might to take on a carrier battle group in the area. The results of that are definitely questionable. Who knows what happens with Iran if they decide to step in, but either way, I don't think it would be good for them to do so against a much more powerful navy in the US. In terms of economics, the carriers, being the people actually moving through these areas, have increased capacity by 20% over the last 12 months, giving them flexibility to maneuver through different regions instead of using the Red Sea. And this can cause disruptions through Suez as well as the Panama Canals. But obviously, all of these disruptions will come at a cost and potentially constrain supply chains, which could ultimately lead to more inflation. So definitely something to keep an eye on. I don't necessarily think we'll get to that conclusion. I think this issue will be solved before then, but definitely something to pay attention to in the short term. Moving over to fear and greed, I wanted to highlight that we are well into extreme greed at this point. We were at a 76 yesterday. We're at a 79 here today. Extreme greed on momentum, stock price strength, as well as breadth. We've talked about all of those things. Put call ratio has cratered over the last several days into extreme greed. Market volatility and safe haven demand are neutralized. We've talked about these being less reliable, but these top three being an extreme greed, along with the overall metric being an extreme greed, is not a great indicator to get into markets, hoping for a continued rally. Moving over to the economic calendar, building permits came in lower than expectations, not by much, but housing starts beat by quite a bit. Previous number was revised down just slightly, and then Atlanta Fed numbers were a little bit better than expected. And then looking at tomorrow, we do have consumer confidence here at 10 o'clock. That'll be interesting. Existing home sales, want to see those continue to remain strong. And then we got the 20-year bond auction, fairly interesting at the end of day Wednesday. Moving over to Max Pain, you can see not a lot of changes here. 470 for Max Pain, a little bit below current prices. Total options continues to tick up almost to 1.6 million. Put call ratio still quite high at 2.3. Call wall 476, which gives you about $1.50 more upside for the Friday session. And then 480 right behind it. Top of the puts is basically right where we're at 474, which would signal to me that this rally is just about done here, at least in the short term. But we'll take a look at that on the charts. Moving over to the charts, looking at the SPY on the hourly and the daily, you can see we went basically straight up throughout the day. Not much movement to the downside at all. 0.61% to the upside. You can see we hit overbought conditions once again on the hourly chart. And then we did touch my level right at the end of day, 474.78. Pulled back a little bit from there after hours. Let's go ahead and show you why that is an important level here. You can see going back to these all-time highs for the SPY, we did have a rally up, a slight dip low, which is right where we are right now in terms of price action, rallied up to that next level at 479.30 just for a moment. And then we broke down significantly all the way down into the 430s in a pretty short amount of time. So we are inches from all-time highs on the SPY. And you can see it's been a super aggressive rally from that 410 area all the way up to this 474.78 level. Doesn't mean we can't break through and test those all-time highs, but the question is what happens then? Will we make new all-time highs on the SPY, or is that going to be the ultimate top for this rally? Moving over to the NASDAQ, on the 15-minute chart, you can see we had this pretty clean channel early in the session. Once that broke, then we fell pretty quickly back down to VWAP, rallied from that level, double bottomed here. Then we had a rising wedge, which broke down, sideways chop, and then you saw this kind of topping formation here. And then once that broke on that last 15-minute candle, we pushed super aggressively on very strong volume into the end of session. Not nearly as clean as the SPY. NASDAQ coming into contact with that 408.81 level like we talked about in yesterday's video. But now here we have broken above it. Looking at the longer term charts here, you can see that 408 level was the all-time high here on the NASDAQ. So we are at an all-time high now, just above that wick high going back to the week of 22 November. Again, the question remains, where are we going to go from here? Let's go ahead and zoom in, get a little bit better picture of that daily chart. It doesn't really give you much more information. We just continue to move higher, breaking out here, momentum bullish, RSI super overbought still on the daily chart, but still bullish. I want to look at the weekly chart. You can see, yep, we are overbought there also on RSI as we continue to rocket straight up to all-time highs. Moving over to the Russell, you can see we rallied up in the pre-market, pulled back just slightly, and then rallied into the end of the session. This is a really strong push here on the Russell. We were kind of watching this as a left shoulder head, right shoulder, and then gapped up in the pre-market, held the 9 EMA and rallied through. Bullish momentum here on the 2-hour. Did touch overbought conditions just for a moment. Looking at the daily chart, you can see just how strong today was. Pushed above all these relative highs, made a new high close here. You can see we are clearly above this July high now. We were testing this level with those wicks. Now we're clearly above it, breaking out above that 198.75 level, and now we are testing the high going back to August of 22, which is that 201.88 level. Definitely interesting to see if we can get above there. Quite a bit less clean once we get above. You can see there's a lot of consolidation from here all the way up until that 212.10 level. But right now, still looks good. Russell breaking out, looks clean to the upside, and a nice strong day at 1.94%. Moving over to the Dow, we have been in price discovery here for a while, continuing to go higher here once again today. Broke out above this kind of relative top at 173.74. Looking at the daily chart, you can see that was a 0.68% rally, so everything looks clean again, making a new high close. We also closed right at the highs, which does look quite strong. Looking at the hourly chart, still holding all of the EMAs and SMAs. In terms of trend, everything looks good here on the Dow. Moving over to SPY, Russell and NASDAQ SPY on the ratios, you can see both of these continue to move in the same direction they have been. Russell continues to outperform as the SPY pulls back. NASDAQ continuing to outperform the SPY just slightly. But really, we've been in kind of a consolidation here over the last couple of weeks. This is the weekly chart. You can see we are slightly higher than last week's close, but right at the same levels that we saw basically throughout November. The bigger story here is the small caps and growth starting to outperform much more strongly over the past several weeks. Moving over to Apple and Tesla. Apple did rally here today, but we're still lower than this relative high here, which actually is the all-time high for Apple at 198.30 or so. Pulled back from that level, tested this trend line here. You can see we established that trend between the low on 4 December and then these wick lows here on 11 and 12 December. Tested that level once again. We've rallied up, still technically a lower high. If it breaks through here tomorrow, that could be quite bullish on Apple. Then we could be looking for a test of this upper trend line on this shorter term uptrend, which would be pretty significant. That would give you a couple of dollars of upside potential. And then similarly on Tesla, we continue to maintain this shorter term uptrend. We're right around those upper trend lines. Does give you a little bit of room, about $2 more to the upside. And then your next horizontal resistance would be 464.68. If that level breaks, that's what I am looking for. Momentum still bullish, RSI still bullish here. Tesla looking a little bit stronger than Apple. RSI on Apple below the SMA. Momentum ticking towards bullish, but still in the bearish side, which is interesting. But like I said, does not look as strong as Tesla in the shorter term uptrend. Moving over to Broadcom and NVIDIA. Broadcom finally cooled here a little bit today, technically down on the day just a little bit, closed at 1137. The close for yesterday was about 1148 or so. So slight pullback, does seem to be losing momentum. Momentum has been bearish already for a while. RSI has been below the SMA for a couple of days already. But of course, price action is king. Price action had been going higher, but it seems to have slowed. Question is, will it pull back and how much? And then looking at NVIDIA, pretty solid pullback here today from the close yesterday. Closed around 501, pulled back all the way down to almost my 487.98 level, or 488. Then it bounced pretty strongly on that first candle of the day, almost 1%, got very close to 497.54. It's above all the EMAs and SMAs once again, as well as VWAP on the 4-hour chart. Overall, this uptrend is still intact. Just looks like a bit of a stronger pullback, but then bounced strongly. You would expect a continuation to the upside for NVIDIA, in my opinion. Moving over to staples and discretionaries, both bullish days. Staples 0.2, discretionaries 0.78. Still a risk-on environment despite these super overbought conditions. Staples continues to test that 144 EMA at 71.62. Tested it yesterday, tested it once again here today. Basically no momentum. You really need to see it get above that level. Then you can kind of trade off it to the 200 or that 72.50 level. This rally seems to have stalled out a little bit on staples. And then looking at discretionaries, we'll go full screen on this one. This continues to look very, very strong. We gapped up through that level, rallied a little bit more, 181.41, next level 185.36. And then historically, you can see this is kind of a midpoint in this consolidation here from February all the way until April of 22. You can see that next level is 185.38. That's that bottom of this consolidation here from April of 22, and then kind of the topping here in February of 22. If that breaks, then you're looking at 189.38, which is the top of this consolidation before we had that bigger breakdown, testing that 144, and then just below it you have that 200, and then we broke really strongly after that test here in April of 22. So we're getting back into those ranges, continues to look very strong. Tesla driving discretionaries higher, still risk on in my opinion. Moving over to oil and gas and energy, you can see both of these had really strong days. Some of the top performing sectors here today. They've had a pretty big down move. Oil and gas was down about 15% from the high here in October down to the low in early December. We bounced from that 128 area and we're back up to 139 or so. Pretty solid move. That's about a 7.5% gain. And we did break this downtrend line. Again, looks pretty clean. Strong day today. You got the 144 EMA sitting at 139.10. Above that, you got the 55 at 140.92. Just behind my level here at 140.88. I would expect to push to that next level. And then if that breaks, 145.92. And then similarly here on energy, we're basically on top of the 144 and 55 EMAs. If those break, you're looking at 87.37. Energy does look a little bit stronger. The downtrend wasn't nearly as strong at about 12.5%. And then the rally higher here was about 5%. And I do think there's a little bit more opportunity here on energy. Let's go ahead and add a level here at this pivot point at 88.88. And then we'll go ahead and add one more here at this pivot high at 92.80. I do think there's a real possibility that we could get back into that zone over the next couple of weeks on energy. Moving over to breadth on the 20 and the 50. Got another step up here today. 20 getting back above 86.53. Tested it yesterday, got above it here today. If this pushes up to that 98 area, that could be the culmination. Does seem like it might happen. Momentum ticking towards bullish. RSI getting above the SMA. And you can see we broke out, retested that trend line, and then broke higher. Everything looks clean here still on the 20-day. And then the 50-day average continuing to chop basically at those all-time highs. 92.25 is a very critical level. Very, very rarely does it get above that level. And we're basically there already. Typically, you get about 1 to 2 weeks in this zone before we start to see pullbacks. And this is the first week we've been here. So you get about a week, maybe 2, for this continued rally before we start to see breakdowns on breadth. Moving over to yields, 3 days in a row here now, we really have not moved. 4 days if you're looking at the 10-year. Pretty interesting to see sideways price action. It's been a long time since we've really seen price action that stable. You can see we had this massive run up with strong moves in yields, massive move down. And then 4 days in a row, basically moving just below that 4% level. Almost seems like someone might be keeping it in that zone. Definitely interesting. And then looking at the 2-year, we did have a little bit stronger bounce on that Friday candle, but ever since then, 3 days in a row, sitting right around that 4.5 level. Moving over to the dollar on the hourly and the daily, big fall throughout the session. You can see we were chopping sideways overnight. Open of the session fell straight back down to this 102 area, tried to rally a little bit in the mid-session, and then we're falling again into the after hours. And you can see that big candle down here on the daily chart. Momentum on both of these bearish. RSI looks bearish. Almost tested the SMA couldn't quite do it. We're breaking down further. Everything to me says the dollar is going lower. The question is, where will we finish? At this point, you have to look for a lower low down around 101.68 in my opinion, which should continue to give equities a little bit of strength. Moving over to bonds, J&K did bounce a little bit off of that trend line. Momentum still stepping down towards bearish. RSI still looking a little bit weak below the SMA, but nice candle, up about 1/3%. Yields continue to chop in this same range. Similarly, bonds are chopping in the same range. TLT, no change here. Did gap up slightly, dojied on the day, continuing to sit just below that major psychological level of 100, but it is still above all the EMAs and SMAs on the daily chart. Still looks bullish. The question is, will it continue higher, or will we see a little bit of a cooling in this same zone for a bit, the same way we are seeing on yields? Moving over to the VIX here on the 2-hour chart, you can see we have another very slight uptrend, continues to hold right at the 9, 21, and 55 EMAs. Momentum slightly bullish, RSI slightly bullish. Haven't really seen any spikes here. Overall, it was a down day, but then we got a nice little spike at the end of the session. Let's go ahead and look at this on the daily chart so you can see it was overall down on the day, but you can see we're still holding above that 9 EMA, still holding the slight uptrend. If it breaks above the 21, that could be an interesting indicator. I still think we're going to see a little bit more bullishness throughout the week, but it is interesting to see this starting to form here on the VIX. Moving over to my accounts, you can see it says I made some money here today, and all of my year-to-date losses are a little bit less than they were yesterday, but my net liquidity is about the same. I think it's down about $40, which is interesting from yesterday's numbers. Doesn't really make a ton of sense to me, but overall, positive day. It makes sense for all of my positions to be up. I was bullish going into the day, and I continue to be bullish here. I have these 100 shares out to 189, and that is a $14 credit. So that puts my max profit on this position at 203. And you can see that's a slight loss here on the day with shares sitting up around 201. And that is a long ways out from here. I do think we're going to see some pullbacks over the course of the next 2 months, but right now you have to remain bullish. And then looking at the Qs, basically the same thesis here. 400 shares, 2 covered calls, max profit here, 416, which does give me quite a bit more upside over the next 2 months. That's about another $7 or 2% higher on that position. And then here I have 405 with $13 credit, which puts my max profit at 418, which is about another 3% higher. And you can see those current open losses on those positions. Those are not real losses. I still have my shares that continue to appreciate in value as we get closer to the max profit on these positions for the next 2 months. And to give you a little bit better perspective on what that looks like, you can see current share price sitting at 409.25, says my theoretical profit on this position is about $100, but my max profit is closer to that $4,400 at expiration. As long as we close above that 405 level in 2 months, I'll be in good shape. And even if it falls a little bit, I'll still be able to make some money. But you do have to be patient in these longer dated covered called positions because you can see those theoretical losses as the calls appreciate in price, but your shares are appreciating in price at the same time. Let me know down in the comment section what you think of the Houthi Rebels and how that situation is going to be resolved. Will it have an impact on the larger global economy, or is this just a minor detail in the grand scheme of things? Definitely like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.